If you've ever heard terms like stocks, shares, Wall Street, or the market and felt a bit lost, you're in the right place. Hey everyone, and welcome back to NIS JKT Discovery. Today, we're going to demystify the stock market and give you a solid foundation to understand how it all works. Whether you're looking to grow your wealth or just curious, this video is for you. What is the stock market? So, what exactly is the stock market? In simple terms, it's a place, often a virtual one, where parts of companies called shares or stocks are bought and sold. Think of it like this. When a company needs money to grow, expand, or innovate, it can decide to sell tiny pieces of itself to the public. Each tiny piece is a share. When you buy a share, you become a part owner of that company. And just like any owner, you hope your share of the company grows in value over time. Why do companies issue stocks? Companies issue stocks primarily to raise capital. Instead of borrowing money from a bank and paying interest, they can sell ownership stakes. This money helps them fund operations, research, expansion, and so on. It's a win-win. Companies get the capital they need, and investors get an opportunity to participate in the company's success. Primary versus secondary market. When a company first sells its shares to the public, it's called an initial public offering, or IPO. This happens in what we call the primary market. Once those initial shares are sold, they then trade on the secondary market. This is what most people think of as the stock market, where individual investors buy and sell existing shares from each other, rather than directly from the company. Key players in the market. To participate, you'll encounter a few key players. Stock exchanges. These are the organized platforms where stocks are traded. Globally, you have major ones like the New York Stock Exchange, Nasdaq, the London Stock Exchange, Euronext, and many more. They provide the infrastructure and rules for trading. Brokers. You can't just call up a company and buy their shares. You need a broker, an individual, or a firm that acts as an intermediary between you and the stock exchange. They execute your buy and sell orders. Popular online brokers have made investing far more accessible for everyone. Investigated. That's you. Individuals, institutions, and funds who are buying and selling shares with the goal of making a profit. How do stock prices change? The price of a stock is determined by good old supply and demand. If more people want to buy a stock than sell it, high demand, low supply, its price tends to go up. To more people want it, low demand, high supply, its price tends to go down. But what influences that demand and supply? A lot of factors. Company performance, strong earnings, new products, good management. Economic conditions, interest rates, inflation, overall economic growth, humiliant events, geopolitical events, industry-specific news, even social media sentiment. Investor sentiment, general optimism or pessimism in the market. Why invest in the stock market? So, why should you consider investing? Wealth growth. Historically, the stock market has been one of the most effective ways to build wealth over the long term, often outpacing inflation. 2. Compounding. When your investments grow and those gains then earn more gains, it's called compounding, often referred to as the eighth wonder of the world. 3. Dividends. Some companies share a portion of their profits with shareholders in the form of dividends, giving you regular income. 4. Ownership and participation. You get to be a part of the success of companies you believe in. The risks. Now, it's crucial to understand that investing in the stock market comes with risks. Stock prices can go down, and you can lose money. The value of your investments can fluctuate significantly. It's not a get-rich-quick scheme, and past performance is not indicative of future results. Getting started, ready to take your first step? Here's a super simplified guide. 1. Educate yourself. Watch more videos like this, read books, and reliable financial news. 2. Define your goals. What are you saving for? Retirement? A house? A specific purchase? 3. Open a brokerage account. Choose a reputable online broker. Do your research to find one that suits your needs regarding fees, features, and user-friendliness. 4. Start small. You don't need a huge amount of money to begin. Many brokers allow you to invest with small amounts. 5. Diversify. Don't put all your eggs in one basket. Spread your investments across different companies and industries to reduce risk. 6. Invest for the long term. For most beginners, a long-term approach tends to be more successful than trying to time the market. And there you have it, a foundational understanding of the stock market. It might seem complex at first, but with a little learning, it becomes much clearer. If you found this video helpful, please give it a thumbs up, subscribe to the channel NIS JKT Discovery. Thanks for watching and happy investing!